All right, let's break down a real market mystery. The other day, while pretty much every major stock was taking a nosedive, one AI company, Rezolve AI, just shot up. So we're going to deconstruct the analysis from the creative investor to figure out exactly what was going on.
So just to set the scene here, we're talking about one of the worst trading days of 2026. The S&P, the Nasdaq, everything was deep in the red. But right in the middle of all that chaos, you had this one stock, Rezolve AI, ticker RSLV, that just completely ignored the trend. It actually finished the day up over 8%. It's the kind of thing that makes you stop and ask, what is happening here? So what gives? How does a single company's stock seem to defy gravity when the entire market is in a free fall? Well, that's the big question we're digging into. Let's break down the key factors.
Okay, first things first, let's look at the main reason for this search. This wasn't some random fluke or market noise. It was all kicked off by a very specific, very big piece of news. And here it is, the spark that lit the fuse. Rezolve AI put out a massive update to its financial forecast. And this wasn't some rumor or a whisper. This was an official announcement that came directly from the company, and it completely rewrote the story for the stock. Now, to really get the impact of this, you have to know what everyone was thinking before the announcement. The general consensus on Wall Street was that Rezolve was on track to bring in about $170 million in revenue for 2026. That was the number everyone had in their models. And then Rezolve just dropped this bombshell. Their new official target for 2026 revenue isn't $170 million, it's $350 million. That's not just a little bump. That's more than double what Wall Street was expecting. It basically signals that they're aiming for nearly 10 times growth this year. Just crazy. And you know what? It gets even better. On top of that huge revenue guidance, they also said they're targeting a $500 million ARR exit run rate. Now, ARR, or annual recurring revenue, is a huge deal for subscription companies. It means they expect to end 2026 on a pace that would bring in $500 million in recurring revenue every single year. Another thing that gives investors a lot of confidence is seeing who actually owns the stock. And in this case, the people running Rezolve have some serious skin in the game. Insiders own nearly 30% of the company. You add in a huge player like Citadel, and you've got a lot of powerful people who all want the same thing, for the stock to go up.
So, with news this big, you can bet the professional analysts on Wall Street were paying close attention. Let's take a look at how they reacted.
Yeah, they didn't waste any time. H.C. Wainwright immediately jacked up their price target to $12 a share. And while Cantor Fitzgerald kept their target at $8, they made a point to reiterate their strong overweight rating, which is another really clear vote of confidence. And this quote from Cantor Fitzgerald, man, it just says it all. They're basically saying, look, if Rezolve can actually pull off these huge numbers they're promising, our $8 price target could end up looking conservative. And, that's classic analyst speak for this thing could go a heck of a lot higher. Okay, so that's the company's side of the story. But there's a whole other kind of wilder side to this that's pouring gasoline on the fire. We're talking about market mechanics. First off, you have to look at this short interest, which is just incredibly high. We're talking an estimated 30.7% of the company's publicly available shares are being shorted. That means almost a third of the tradable stock is in the hands of people who are betting the price is going to fall. And when you have that many people betting against a stock, you create the perfect setup for what's called a short squeeze. See, when good news hits and the stock price starts to jump, all those short sellers start losing money fast. So to stop the bleeding, they're forced to buy back the shares they borrowed. And all that buying just creates more demand, which pushes the stock price even higher, creating this crazy upward spiral. And if that wasn't enough, you've got a ton of wild action happening in the options market. The analysis shows a huge amount of trading in call options, especially around the $5 strike price. In fact, get this, over the last week, 95% of the big institutional option trades have been bullish. That's not a coin flip. That is a massive, one-sided bet that this stock is going to make a big move up, and soon. So you've got this perfect storm, right? A huge fundamental catalyst from the company, plus all this speculative pressure from the market. But where does the story go from here? What are the key things we should be watching? Well, looking ahead, there are things that could help and things that could hurt. A really strong earnings report from a chip giant like TSMC could lift the whole AI sector, which would be great for Rezolve.
But on the other hand, big geopolitical risks like tensions in the Strait of Hormuz could rattle the entire market. But honestly, at the end of the day, it all boils down to one simple thing. Can Rezolve actually deliver on its own gigantic promises?
And that's really the question we're left with. Rezolve has definitely gotten Wall Street's attention with this jaw-dropping guidance, but now the pressure is on to execute, all while navigating a pretty shaky market. So is this the perfect setup for a massive breakout, or are the expectations just way too high to ever meet? It's a classic high-stakes story, and only time is going to tell us how it ends.